Welcome to Supercharging Your Finances in Uncertain Times. My name is Rick Dahlseid, and I'm a CPA who, with a master's in taxation, has worked with nonprofits for the past 15 years. I'm a consultant with PBO Advisory Group here in San Diego, where I get to consult with nonprofits. I'm also an instructor with the University of San Diego in the School of Leadership and Educational Sciences in the Division of Professional and Continuing Education, where I get to teach nonprofit financial management a couple times a year. It's my goal for this course to equip you with a fresh set of ideas to help your nonprofit create sustainability, stability, and certainty to allow it to flourish. In this presentation, my hope is that you will be able to get ideas that will help you optimize your finance functions and expertise in order for your organizations to flourish. As you have probably already figured out, today's presentation is pre-recorded, and I won't be able to answer questions in real time. Of course, you're welcome to email me with any of your questions, and I'll be sure to get back to you. My contact information will appear on the last slide. We have a lot to cover, so let's get started. In my presentation today, I hope to provide you with prompts to be able to ask questions of your organization or certain individuals responsible for those important finance functions. We're going to focus on three main areas in order to assess today to give us a better picture of what is happening in our organizations and what we can expect to happen in the future. Those three areas are strengths, data, and resources. What you need to know. So many times, nonprofits work from a position of scarcity. I'm here to tell you that you have abundance in your organization to consider. I'm also going to point out some very visible, but maybe not recognized strengths that you need to know about. Because it takes all sorts of people to do the work in a nonprofit, the majority of our inventory and self-assessment is going to be on the human capital. We'll also touch on the financial assets, mostly cash, and also on the importance of our systems and processes. The highest level of our human capital comes in the form of our beloved board members because of the trifecta duties of loyalty, obedience, and care. The board members, which are volunteers, by the way, have a legal commitment to the nonprofit they serve. During times of uncertainty, there have been many heartwarming stories of boards rallying around the executive director to help, and sometimes help in a financial matter as well. It's also good to take stock of other advisors, both paid and unpaid, that have been interested in helping you to continue to provide service and advice to nonprofits during these important, uncertain times. When it comes to a good technical makeup of a board, I like to use the acrostic Marlin, where first of all, Marlin is a big fish, right? So it always helps to have a board member with the financial resources to help out in a significant way. In addition, the M stands for marketing professional. I like marketing professionals as board members because they can do a great job of helping the organization look good in the public's eye. From the website, to the logo, to branding, to collateral material, marketing professionals will help the organization look professional. The next A is for accounting professional, and preferably a CPA with nonprofit experience. The R is for real estate professional. These folks know a lot of people, and that comes in handy when raising money or looking for other board members. L is for legal. Nonprofits are forever needing help with contracts, employment law, and general counsel activities. Lawyers also know other specialized lawyers that may come in handy in dealing with those situations that come up in an organization's legal activities. The I is for insurance professional. They'll help you keep your net assets protected and provide a good level of risk management advice. Nonprofits will always need help with liability, professional, workers' compensation, and maybe even health insurance. Finally, the N is for nonprofit expert. This is the other category that the banker would fall into, or other executive directors of another nonprofit that may sit on your board. In addition to the board members, and continuing on the theme of assessing our strengths, we need to consider our employees. The last almost 100 days of this pandemic have created a lot of extra stress to our employees that they weren't expecting. It is important to regularly check in with your employees to see how they're doing. As you may know, some are working from home, and that may also be a whole new level of stress. Some organizations, depending on size, are having regular Zoom calls to let everyone know how things are going. Some are also having town halls where employees can ask questions. We also need to see where we are at with our leaders. Is everyone still on board, or have some left the agency that represent key areas? If so, consider a temporary fill-in with an outsourcing firm. The same goes for the general staff. If you have gaps in some of your key areas that relate to either earning or collecting money or paying bills, it's recommended that you consider filling in that with someone from an organization that specializes in outsourced professionals. In addition to our board members and employees, we're going to round this out with our human capital strengths assessment in considering our volunteers, donors, and grantors. We know that in many cases, the volunteers are what help keep us going. Make sure to assign someone to place a phone call to your volunteers and find out how they're doing, and let them know how things are going at the organization. There might even be someone that's willing to make phone calls to other volunteers to check in with them and create a greater sense of goodwill in your organization with volunteers. Donors are some of the most generous people on the planet. They understand the trying times we're in and would also appreciate a phone call to get an update on the organization's activities. In all honesty, it shouldn't take a pandemic for the organization to have a regular check-ins with its donors. And finally, grantors should also be followed up with. It's important to know what the expectation is from various federal, state, and local grantors about the ability to do the work you have agreed to do during this time. It's better to know their expectations earlier than later, when there's little time to correct any previous actions. They will also likely want to know what your expectations are for the immediate future with respect to honoring the agreements. Whatever you do, don't leave them guessing. So to recap, as far as our strengths with our human capital, we're considering our board members, our advisors, our employees, our volunteers, our donors, and our grantors. Moving on to the next category, and for you Game of Thrones fans, you've often heard cash is king. Well, if cash is king, then data is hand to the king. I'm sorry if that wasn't funny, but if you're interested, Google hand of the king. So here we go. You need data, and especially as it relates to liquidity. Now, liquidity is one of those financial terms that means cash. There are two main predictors that you need to get a handle on. The first is days cash on hand. This calculation will tell you how many average days of your organization expenses you can pay for before running out of money. If no additional money comes in, this could be a problem. You need to know that number. And this is a rolling number that should remain fairly constant with all things being equal. The calculation is performed by multiplying your total end of the month cash balance by the number of the days in the month, which is usually 30 or 31, and then dividing that number by the total amount of expenses for the month. So in order to walk through a fairly simple example, say the ending cash balance from the April bank reconciliation was $1,000. Well, $1,000 times 30 days in April equals $30,000. The expenses for April were $2,000. So $30,000 divided by the $2,000 average expenses for April equals 15 days of cash on hand. That's how that calculation is performed. It's also important to know how much of your cash is available, if any of it is possibly locked up in a CD that isn't easily accessible. As well, restricted cash is present in many nonprofits that result from money from donors or contracts with grantors that cannot be spent outside of specific purposes. It is important to know how much of your cash is restricted as well. Continuing on with the cash theme, your cash cycle should be understood to determine where you can continue to have it rapidly flowing into your organization and slowly flowing out. Look for creative ways to accelerate revenue and increase collections. Every organization is unique, so this will be a project for your team to look at. Also, in slowing down the outflow, what are some vendors you could talk with in order to stretch out a little more before paying? Consider calling major vendors and see what kind of arrangements you could work out with them. One determining factor in your ability to pay bills is to calculate the ratio of current assets to current liabilities. This is called the quick ratio. Current assets are usually cash, prepaid expenses, and accounts receivable. Current liabilities are usually accounts payable, payroll, and other short-term payables. The ratio of current assets to current liabilities should be 1 or greater. If not, it may signal trouble. Lastly, we need to look at our reserves. If you have them, they were likely put away for a time such as this. So check your reserve policy. Most of your data is going to come from systems and processes. In times of uncertainty, it isn't time to cut corners on recording and reporting transactions. Make sure your accounting routines are maintained. Invoices are billed and collected, bills are recorded and paid, and also that payroll is taken care of. And speaking of payroll, this is an area that definitely needs some TLC. Since the pandemic started, human resource staff and payroll staff have had to deal with layoffs, furloughs, sick leaves, just to name a few. There is some relief to nonprofit employers that are able to take advantage of a provision in the CARES Act to defer payment of employers' portion of payroll taxes until the end of 2021 and 2022. Be sure to check with your financial advisor about this opportunity. And please, please, please don't let your guard down when it comes to cybersecurity. We must remain vigilant as many bad actors are out there trying to hack your email and get to your data. So to review the data section, remember these points. Liquidity is very important. You need to have cash and have cash strategies to hold on to it. Keep your systems, especially accounting and payroll, running, and stay vigilant against cyber attacks. The overall recap so far was to take an inventory to know your strengths and to know your data. Now we'll finish it up with knowing about some resources. Since the pandemic, the federal government and also local governments have come to the aid of nonprofits. Thank goodness. Nonprofits are on the front lines doing much of the heavy lifting when it comes to caring for people. We're going to touch on a few of the main federal programs recently released. But before that, know that the traditional avenues for resources are still active, which include going to your bank for lines of credit and bank loans. The CARES Act provided for a number of forgivable loan and regular loan programs, as well as payroll relief through the Employee Retention Credit. Many organizations have applied for and have been granted the PPP loan, which the rules have recently been relaxed, allowing an organization to have the entire loan forgiven if certain conditions are met, and repayment terms extended to 5 years. There is still money in this program to be loaned. So please, if you have not participated in this, I urge you to contact your bank. The Emergency Injury Disaster Loan Program, or often called EIDL, is available to most businesses and nonprofits with less than 500 employees and can provide a loan of up to $2 million at a 2.75% interest rate. The Employee Retention Credit has not been given as much attention as its racier cousin, the PPP loan, and the less desirable EIDL, but promises to also help employers with a refundable payroll tax credit of up to $5,000 per employee per quarter, if the organization can show diminished revenue from an identical quarter in the previous year. And finally, the Fed has also recently launched a Main Street lending program to help struggling organizations that had previously been financially strong, but for the pandemic. Right now, they're only for for-profit organizations, but they are currently working on a special program just for nonprofits. It has been my pleasure to lead you on this journey today to supercharge your finances during uncertain times. While it is true that no one knows the future, small things we can do to fortify our finances will produce stability, sustainability, and a level of certainty that we will be here tomorrow to keep doing the good work we've been called to do. On behalf of myself and PBO Advisory Group, I wish you all the best and an enjoyable remainder of your Nonprofit Academy experience. If there's anything I can do to help you with any of the topics discussed today, or with resourcing nonprofit expertise in general, please give me a call or drop me an email. I'd love to hear from you. And please stay safe and healthy. You are essential.